Hello, and welcome back to the Stock Pro, where we slice through the market noise to bring you clear, actionable insights. After 2 weeks of historic gains, the US stock market took a breather this week, with the S&P 500 and the Nasdaq snapping their winning streaks. Trade tensions, mixed earnings, and the Federal Reserve's looming rate decisions kept investors on edge, while Bitcoin surged past $100,000, signaling a shift in risk appetite. Whether you're just starting with a few bucks or running $1 million portfolio, we're unpacking the 6 biggest stories that shaped stocks, crypto, and your money this week. So grab a coffee, maybe a calculator, and let's break down the action. Plus, stick around for a bonus crypto deep dive. First up, the market's hot streak cooled off. After the S&P 500's 9-day winning streak, its longest since 2004, the index fell 0.78% on Monday and closed the week slightly down. The Nasdaq dropped 1.08% on Monday, hit by tech stock weakness, while the Dow bucked the trend, climbing 1.38% thanks to gains in industrials like Boeing. So, the big question is, what tripped the market? A mix of uncertainty and Fed jitters. Investors hoped for more progress on US-China trade talks after last week's optimism, but Treasury Secretary Scott Bessent's testimony to Congress on Tuesday offered no concrete updates, leaving markets antsy. Plus, the Federal Reserve's two-day meeting started Tuesday, with no rate change expected. All eyes were on Chair Jerome Powell's Wednesday press conference for clues on 2025 policy. Charles Schwab noted that tariff fears like Ford's $1.5 billion hit and Palantir's post-earnings slide weighed on sentiment. For new investors, markets hate uncertainty. When big news like trade deals or Fed moves stalls, stocks can dip as investors play it safe. For experienced investors, the S&P 500's pullback looks like profit-taking after an overbought rally. Watch support levels around 5,600. Tech stocks last week's heroes stumbled. Palantir plunged 7.2% Monday, despite meeting earnings expectations, as its guidance fell short of bullish whisper numbers. Advanced Micro Devices, also known as AMD, also slipped pre-earnings, slightly down Tuesday, with shares already off 17% in 2025 due to tariff fears impacting chip demand in autos and phones. Meanwhile, Him and Hers Health dropped 7.2% after weak Q2 revenue guidance, and DoorDash fell 5% pre-market after missing revenue expectations and announcing a $1.2 billion acquisition of 7rooms. On the bright side, Disney surged Wednesday after strong earnings, boosting the Dow, but the tech-heavy Nasdaq struggled, with Apple and Tesla pulling back 3.1% and 7.3% Thursday after a massive tariff-driven rally the prior week. Investopedia reported that tech volatility reflects uncertainty over AI spending and tariff impacts on supply chains. For new investors, earnings can swing stocks hard. Strong results lift prices, but weak guidance tanks them. For experienced investors, tech's facing resistance at the 200-day SMA. A break below could signal more downside, so hedge accordingly. Trade policy kept markets on a leash. After April's tariff chaos, when Trump's 145% tariffs on Chinese goods sparked a 6% S&P 500 drop, last week's trade deal hopes with China and the new US-UK agreement drove gains, but this week progress stalled. Bessent's congressional testimony Tuesday lacked firm commitments, and Trump's Thursday confirmation of a 145% cumulative tariff rate on China, 125% goods duty, plus 20% fentanyl levy, spooked investors. Still, Trump hinted at a possible tariff pause extension, keeping hopes alive. A bright spot? Wednesday's US-UK trade deal announcement lifted stocks, with Investopedia noting it as a sign of more deals to come. Bitcoin also jumped above $100,000 for the first time in 3 months, reflecting optimism for pro-crypto policies. But Ford's 2.5% dropped after suspending 2025 guidance due to a $1.5 billion tariff hit, showed the stakes. For new investors, tariff risk costs, hurting companies like Ford, but trade deals can spark rallies. For experienced investors, tariff uncertainty is keeping volatility high. Consider bears trading, long UK-exposed stocks, short China-dependent ones. Now, let's talk crypto because Bitcoin stole headlines. After dipping below $80,000 in April, Bitcoin surged 15% in April alone, hitting $100,000 Wednesday for the first time since February. CoinShares reported $1.8 billion in Bitcoin ETF inflows for the week ending May 3rd, with total crypto funds inflows of $5.5 billion over 3 weeks. But Coinbase fell 1.4% after a downgrade, and the Trump meme coin dipped 10% amid fears of competition from Truth Social's new utility token. What's driving the rally? Trump's pro-crypto stance, including a proposed crypto strategic reserve, and the shift away from US stocks and treasuries as tariff fears grow. Reuters noted Bitcoin outperformed stocks in 10 out of 17 sessions since April 2nd, with volatility dropping to 18-month lows. However, the Genius Act, a stablecoin regulatory bill, failed the Senate vote, raising regulatory concerns. For new investors, Bitcoin is a high-risk asset that can rally when stocks falter, but it's volatile. For experienced investors, Bitcoin's inverse correlation with Treasury yield curves is at a 2-year high. Consider it a portfolio diversifier, but size positions small. Economic signals were a mixed bag. The ISM Services PMI rose to 51.6 in April, from 50.8, showing expansion but slower growth in business activity. Jobless claims fell to 219,000, beating expectations. Consumer confidence stayed near a 5-year low at 86. Investors dialed back rate cut bets, with CME's FedWatch tool showing only a 17% chance of a June cut, down from 37% last week. The Fed's Wednesday decision to hold rates at 4.33% was no surprise, but Powell's press conference hinted at caution due to tariff-driven inflation risks. Edward Jones noted that with PCE inflation at 2.3%, policy remains restrictive, but tariffs may not cause sustained inflation, supporting a 3.5 to 4% Fed funds rate target by year-end. For new investors, the Fed's rate decisions affect borrowing costs and stock valuations. No cuts means tighter conditions. For experienced investors, Powell's tariff comments suggest a hawkish tilt. Also watch bond yields. 10-year treasuries hit 4.32% Thursday. Let's wrap up with the week's winners and losers. Skechers flattened after soaring 24% Monday on news of a 3G Capital buyout to go private. Ulta jumped 8% Friday, despite a 23% year-to-date loss, buoyed by retail strength. On the downside, Northrop Grumman tanked 12.7% after missing sales and profit estimates, dragging defense stocks like RTX down 9.8%. Kimberly-Clark slipped 1.5% after cutting profit forecasts due to a $300 million tariff hit. Next week is huge. CPI inflation data and consumer sentiment reports drop, potentially moving markets. Earnings from Walt Disney, Uber, and Coinbase will test sector strength, and trade talk updates could swing sentiment. Big reports like CPI can shake markets. Track them to understand price moves. That's the wrap on this week's market rollercoaster. From a stalled rally to Bitcoin's $100,000 milestone, the market's serving up risks and rewards. New investors start with a low-cost ETF to ride out the volatility while you learn. Experienced investors also keep eyes on CPI, Fed signals, and trade headlines. Stay nimble with stop losses. What's your move? Bullish on crypto or hedging stocks? Drop your thoughts below. If this breakdown helped, smash that like button, subscribe, and hit the bell for more. Make sure to watch last week's video on screen. Until next week, keep stacking those gains and stay one step ahead of the market. And as always, happy investing.